Okay, so we're diving into the market mayhem of October 3rd, 2024. Gotta love those roller coaster days on Wall Street. And we're tackling this with some fascinating data points from those two audio snippets you sent over.
Hopefully sending you home with some clearer takeaways for your own investing game plan by the time we're done here.
Exactly. Now everyone's freaking out about the market dip, right? I mean, all the major indices nosediving, closing in the red. But here's what I found interesting. Energy and tech, they seem to be holding their own, like they're in their own little safe bubble.
Good catch. It's definitely not the usual suspects leading the pack, or should I say lagging behind, with 387 stocks down on the S&P 500 versus only 113 scraping by with gains. Tells you there's some serious jitters out there.
Ah.
But some sectors are still clinging to that we're different hope.
Yeah, like those tech giants are somehow immune to gravity.
Maybe, maybe not. The million-dollar question is what's driving this divide. Why are investors flocking to those specific sectors even with the market in a slump? Gotta decode the psychology behind the numbers. That's the key.
All right, so let's break it down. What events could be stirring up this fear cocktail? First off, the elephant in the room, the East Coast dock workers strike. Finally done and dusted today. What a relief, right?
No doubt. Anytime we can dodge those supply chain bullets, it's a win for everyone. But this deal, it comes with some serious baggage. It's especially if you're thinking long game economic outlook-wise.
You talk about that whopping 62% wage increase over 6 years? Man, some dock workers could be raking in close to $250,000 by 2030. Hard to argue with those numbers.
You got that right. And while those raises are well-deserved, let's be real, they will fuel the fire under prices, especially anything we import, so buckle up.
So basically, we've swapped one crisis-stalled ships for another, soaring prices. Inflation City. Here we come.
Whoa, hold on. It's not that black and white. Getting those docks up and running again was critical. Short term, we needed that. But yeah, this whole thing just highlights how intertwined wages, inflation, and what we can actually afford are. How do you see this shaking out in your own wallet down the line?
Oof, making me rethink that vacation I had planned, that's for sure. But since we're talking numbers, let's hit on the other big shocker of the day. The ISM Services PMI, it blew past every single forecast, jumped to 54.9. Talk about exceeding expectations.
Yeah, and that little surprise is sending shockwaves through Wall Street. See, investors were holding on to this idea that the Fed might finally tap the brakes on those interest rate hikes. But this PMI data, total buzzkill, throws a wrench in the whole pivot party they were planning.
Because the strong services sector orders booming business activity through the roof. It's basically screaming, hey, economy's hotter than you think.
Bingo. And a red-hot economy usually means one thing: hello, inflation, which gives the Fed even more reason to keep those interest rates high. And the reaction was almost instantaneous. Bond market went haywire. 10-year Treasury yield shot up by 1.71 points.
Yeah, not exactly music to the ears of anyone hoping for a break from those rate hikes. So we've got investors juggling inflation worries, the Fed possibly slamming the brakes on the economy, and this weird stock market split. Where do we even go from here?
Well, all eyes are on tomorrow's jobs report, right? The non-farm payroll. And with predictions all over the map, some saying 70,000 new jobs, others 220,000. It's anyone's guess, really. The market's in for a wild ride.
Let's talk about unpredictable. It's like trying to forecast the weather in a hurricane. But hey, amidst all this doom and gloom, are there any silver linings? What about AMD? Their AI conference is coming up, right?
Yeah.
Last time that thing sent their stock through the roof.
True. And then there's Nvidia. They're riding that AI wave too. Those chips are selling like hotcakes. Maybe a little AI magic is just what the market needs to lighten the mood.
Fingers crossed, right? So you're saying maybe hold off on buying that island getaway for now.
Let's just say I'd wait and see how things play out. AMD stock is dancing around a crucial resistance level at $170. And Nvidia, they need to smash through that $130 ceiling before we can even talk about a real upswing. Technical stuff, but trust me, investors are glued to those charts.
Makes sense. It's like a whole game of strategy playing out in the background. One big chess match we don't always see as individual investors.
Exactly. And that's why it's crucial to have a game plan of your own. Spread those bets. Manage your risks. Stay informed. Don't just follow the hype train or trust your gut. That's a recipe for disaster.
So in this market, knowledge is king.
You got it. The more you understand how this whole thing ticks, the better decisions you'll make. Simple as that.
Okay, so before we wrap up, both our sources mentioned the whole geopolitical situation.
Yeah.
Especially what's happening in the Middle East. Adding fuel to the fire. How should we be factoring that into our portfolios? It's not like we can just ignore it, right?
You're right. It's often the elephant in the room. Economic analysis tends to brush it aside, but geopolitical risk, that's a whole other beast. Hard to measure, but it can make or break the market.
Exactly. And it's not just about avoiding certain regions, it's those ripple effects. Energy prices, supply chains, even consumer confidence takes a hit. The whole world feels it.
Absolutely. And right now, the Middle East. That's a powder keg. Potential for things to escalate and throw everything off balance. No wonder the market's on edge.
So how do we even begin to make sense of it all? It's like trying to predict the lottery numbers.
There's no crystal ball, unfortunately. But here's the thing. Diversification is your friend. Spread those investments across different assets, different regions. Don't put all your eggs in one basket. You know the drill. And think about sectors that tend to weather the storm better. Consumer staples, healthcare, the essentials people always need no matter what's going on in the world.
So a defensive strategy, sort of like building a financial bunker.
Exactly. And of course, stay informed. Keep an eye on those headlines, but don't get sucked into the daily drama. Look for the bigger picture. Analyze those potential impacts and adapt as you go.
So much to keep track of. Feels like you almost need a PhD in geopolitics these days, just to understand your portfolio.
You and me both. But that's the thing about investing. It's not just about the numbers. It's about understanding the whole playing field, the economics, the global landscape, and making those informed decisions.
Well said. Well, on that note, we'll leave you with this. As we head into the final stretch of 2024, maybe take a moment, reassess your own risk tolerance, dust off that investment strategy, and hey, don't be afraid to phone a friend. Get some expert advice if you need it. Remember, knowledge is power, especially in this crazy market.
Couldn't agree more. And sometimes the best thing you can do, just breathe, stick to your guns. Don't let the daily ups and downs rattle you. The market has a way of bouncing back.
Words to live by. Thanks for breaking it all down with us today. It's been enlightening. And to everyone listening, stay informed, stay curious, and most importantly, stay invested.